HIMS fell as much as 16% earlier today on big news that Amazon is breaking into their space. The stock is down about 14% as of this recording, and this comes just one day after the stock broke through new all-time highs over $30 a share. And just if you look at it from, a weekly perspective, it's absolutely crazy the amount of volatile moves that the stock has in a short time period. And in this video, I'm going to be covering the Amazon news as well as touch on a few Q3 earnings highlights and also what I'm doing with my position going forward. A lot of stuff to cover here. Let's jump right in. Okay, so if you know nothing else about hymns, I urge you to check out some of my other videos that I make on this channel. It's becoming a bigger and bigger position of mine, and it's a company that I'm increasingly bullish on. I also do a regular podcast on hymns every single week, talking about the financials and also news related to the company. So make sure you tune into that on Tuesdays at 6 p.m. Eastern. So I think it's best to start off chronologically with some of the earnings numbers because HIMS reported earnings 2 weeks ago, and then we will make our way to this Amazon news, and I'll spend a majority of time on the Amazon news. So HIMS reported third quarter earnings a couple weeks ago. I covered this live on the channel, and I was posting on X around the major numbers, so I won't dive too deep into the specifics. But basically, they beat on the top and bottom line along with all the major other metrics. Revenue beat by about $20 million. Net income came in at 75 million compared to 7.6 million in losses that they had in Q3 of 2023. And EPS was a massive beat at face value, although there was a one-time tax benefit. If we take that out, EPS came in at 7 cents versus 5 cents expected by analysts, which would still be a beat. Now, the stock price reaction after the earnings was lackluster. I think it even opened red on that day. And that's when I began buying more heavily into my position at $20 a share on that dip. I also have November 22nd, $22.50 call options that I bought as an earnings play. And I covered that on the Bootleg Weekly podcast. And it was somewhat of a risky play, obviously, because it's a couple weeks out. Yesterday, when we broke through $30, they were up 700%. And even today, after this huge decline, they're still up over 180%, something like that. That's going fairly well. And I think we're going to see a quick rebound off this news, but I'll get to that in just a second. So, first, let me just talk a very quick primer on Q3 numbers. 77% growth in revenue, 44% increase in subscribers, 24% increase in revenue per subscriber. Price to earnings ratio was cut dramatically. It was 249, and I just checked it today. It's at 54. And we also learned on the earnings call and in the report that management also bought back shares in Q3. Around $15 a share was the average price, which means that management is essentially setting a floor for the company where they think it's undervalued at $15. And we got strong commentary from management on the compounded GLP-1s. We got new product announcements with regards to liraglutide coming soon. We also got pretty strong commentary on the Hers brand, which is now over 400,000 subscribers and growing quite rapidly. And on top of that, they also raised their guidance for the fourth quarter. And if you look at 2025 guidance numbers for analysts, it's actually revised upwards as well. And so now you have to keep in mind that this company reported fantastic earnings. They did so on November 5th. And if that date sounds familiar to you, it's because that was the week of the election. And I think part of the rally that we've been seeing over the past week with regards to him stock is macro tailwind specific because first of all, it's a small cap company and you have money flooding into the market, but also HIMS is going to potentially see a benefit from a macro perspective with the whole RFK aspect of making America healthy again and all the implications that that could have for a business like HIMS because they operate in the weight loss space and off patent drugs being allowed and the federal government being more scrutinous of the FDA and of big pharma as well, further deregulation. All of these are potentially good things that can help a smaller player like HIMS in this healthcare space. So that's something that could potentially further help tailwinds in this company and in the growth story over the next several years from a macro perspective. Now, what you saw after that earnings and after that election was the pretty aggressive rally breaking through that $25 price target. And that was the previous all-time high at $25. And we broke through and we sliced through 26, 27, 28, and eventually broke through $30 per share on yesterday before pulling back. And this brings us to the news today around Amazon and HIMS. Now, I personally tweeted on moments where I bought more, like I bought more at $20 a share after earnings. I also picked up a considerable chunk at $24 a share, and I've since been averaging up consistently. I think my cost basis on this company is now like 18 or $19 a share, even though I was initially buying this at $13 a share at the end of August when I first started my position. So we've come quite a long way in the past several months. I mean, this has done a 2x since September, and that's not for nothing, right? It's backed by great results that the company is consistently executing on. And the market is finally starting to realize the potential for this company because, in my opinion, this is just the beginning of that growth story, even though we're breaking through all time highs on a consistent basis. Now, let's run through this press release from Amazon together. The title is, quote, Amazon introduces low upfront pricing for a telehealth visit with treatment plan and fast free medication delivery for men's hair loss, eyelash growth, anti-aging, ED, and motion sickness for Prime members. So just looking at the article here, Prime members can now quickly and easily treat health, beauty, and lifestyle conditions for prices ranging from $10 to $19 a month. So they do mention here that they have pay-per-visit telehealth services. So they have over 30 conditions, and basically you can have on-demand messaging for $29 and video for $49, which you can pay by credit card or by a spending account. But now they're building on this foundation by introducing this upfront pricing for clinical visits, treatment plans, fast free medication for Prime members. So if we scroll down a little bit, we can see how this works. It's going to be available on Amazon.com or on the mobile app where customers can view a treatment price for five common health conditions and beauty treatments. And then they can have a virtual consultation either by messaging or by video. And then if medication is needed to treat the condition, then they're going to do so through Amazon Pharmacy. Continuing in the press release, they say customers can see both the price of their telehealth consultation and their medication from Amazon Pharmacy for their desired treatment before moving forward with the care. Basically, you have to be a Prime member for this, and then you have to pay for the consultation, and then you have to pay for the medication, which then just gets delivered to your house, essentially. So it's pretty straightforward in terms of how they explain it. So let me share some of my high level thoughts now that we just ran through that. The first is that Amazon has been eyeing this healthcare industry for quite a long time, longer than just yesterday. Investors and HIMS have known this to be a case for quite a while. In fact, Amazon announced pretty much this exact same news in June of this year, and HIMS dropped 7% back in June on that day when they announced this. So this is just deja vu at this point from a stock price perspective, the gut reaction that we're seeing in the drop. And while I was not invested in this company back in June, I have been through some pretty aggressive drawdown days with regards to news. And some that come to mind are all GLP-1 related with regards to Eli Lilly and the shortage. And every day that some news like that comes out, HIMS drops like 14% on the day. And then once you read past the title of the press release, you realize that, oh, wait, this either doesn't affect HIMS at all, or it's fairly insignificant to what HIMS is providing. And so all I want to say with that is that this is an incredibly news sensitive stock. It will jump up and down based on this news, even though it might not have a huge impact on the actual company. So I think the reaction to this news in particular is overblown, in my opinion. And I say this because this news should have been priced in long ago, if not years ago, definitely months ago when this was released in June. The fact that it's falling so much tells me that there's probably a new cohort of investors that are in this company since June that are seeing this for the first time and that think this is, brand new, or that there is something novel here that wasn't announced before. But this was announced before, and this was on our radar before. I mean, we've talked about Amazon as a potential disruptor in this space on the HIMS Weekly podcast multiple times. Look, I don't want to be perma bullish on this company, and I don't want to mince words when I say that one of the largest companies in the world coming after your addressable market is not a solid foundation to give many investors pause. It absolutely is, especially because we're talking about a company that's a $5 billion market cap in HIMS, right? But off the bat, I think it's also unfair to say that everything Amazon touches turns to gold, or every space that Amazon enters disrupts everybody else. They've had many products and announcements that have fallen short of the mark, and they've also been able to coexist in many markets with other players, right? If you just look at Amazon buying Whole Foods, They didn't disrupt every grocery store out there. Amazon launched Fire Stick, and yet Roku and Apple are still growing and have market share. Amazon has Prime, and Netflix is still existing. And what I want to illustrate there is that the space as a whole is growing. Just because Amazon enters the space doesn't immediately disqualify the efforts of everybody else in that space. You can still have a market where everybody wins. It's not a winner take all type of market. And even if you look at healthcare specifically, Amazon bought PillPack in 2018 for $1 billion, basically combining their distribution network and fulfillment benefits for Amazon Pharmacy to have customers' medication delivered to their door. In 2018, they had a joint venture with Berkshire and with JP Morgan to start Haven, which was a low cost, high quality healthcare for their more than 1 million worldwide employees. And guess what? Haven later failed and was disbanded in 2021. And a couple of the main reasons why this initiative failed was because they didn't have the disruption that they were hoping to have. Another example is in 2019 when Amazon launched a telehealth service called Amazon Care. Well, Amazon Care was ultimately shut down by the company in 2022. 3 years later, Amazon Health Services lead Neil Lindsay said in an email that this was not the long term solution for enterprise customers. So, if we're keeping score, Haven failed, Amazon Care failed. In 2020, they launched Amazon Pharmacy to offer free 2-day home delivery of prescriptions to Prime members. In 2023, they launched RX Pass, which is a $5 add on for Prime members to access generic medications. And I'm sure there's a half a dozen other healthcare related initiatives that I'm forgetting about or I haven't included here because this would be a much longer video if I talked about all of them. And the point that I'm trying to make by listing these out is two things. Number one, Amazon has had a strong desire to expand in the telehealth space for a long, long time. And the fact that we're having a 14% sell off on this news, I think is a little ridiculous because this is a known risk factor in investing in a company like Hims. The second thing is that Amazon is not the all encompassing industry killer. It's not like absolutely that the day this article will launch, tomorrow Hims is going to go to zero because Amazon is into the space and the party's over, guys. We can't make money here. Yes, they will enter a space that they deem large enough to be profitable and they will increase the competition in that space. But this is a $2 trillion company. The spaces that they enter are large enough for multiple players. They wouldn't be entering this space if it wasn't large enough. So basically, I think that just because Amazon is encroaching into territory that Hims plays in does not immediately bankrupt Hims. It doesn't immediately kill all the growth. It will likely put pressure over time on those growth rates, which is obviously a negative. But the flip side of that is it also brings a ton of awareness to the problems that Hims is trying to solve and the space that Hims is trying to play in. You have to consider the scale, right? Because Amazon is a $2 trillion company and it has to be very, very careful in the markets that it wants to expand into because those markets have to have two things: large enough total addressable market for Amazon to be able to make it worth their while, essentially, and a problem large enough to satisfy the growth requirements of a $2 trillion company. That's a very inherently lucrative space that Hims is playing in. Because if you have this $2 trillion company now coming after the same total addressable market that you're chasing, well, it validates that total addressable market. It means that that space is large enough to support a $2 trillion company, let alone this $5 billion company in Hims. And that in itself, to me, is massively bullish in validating that need and that space. And don't get me wrong, I understand why people are concerned. It's because Amazon has massive resources, they have a large amount of human capital, they have a gigantic cash pile, they have a big network of users who subscribe to Amazon Prime, and they have a massive established fulfillment network around the world. So obviously all of these things put together gives them a massive leg up in terms of being able to scale their own inherent solution. But bringing me back to my earlier point, it's not going to kill Hims overnight. It's going to put more pressure on them. It's going to affect their revenue growth rate, which right now is incredibly healthy at 77% and projected to be 91% in Q4. And it's ultimately going to put more pressure on margins, perhaps, possibly also customer acquisition costs, right? Because now you're competing against one extra player in the space. And I think the thing you have to understand when you're balancing these two aspects out is that the moat for a company like Hims, in my opinion, is that personalization aspect. And it's evident in the growth rate of that segment. I'm just going to put up the chart here with the share of total subscribers utilizing a personalized product, which has grown 175% year over year. And the personalized subscriber base now makes up for over half of the total subscriber base at over 1 million users who are leveraging a personalized solution by Hims. Management has also highlighted in this latest call that they have continued to broaden the personalized offerings on the platform to draw a broader audience, and that more than 65% of new subscribers added over Q3 subscribed to a personalized solution. And in addition to this, they also saw higher retention with personalized solution across many of the specialties. So essentially, I'm saying that HIMS does have a moat, a value proposition that is unique that Amazon doesn't have. So yes, it's going to affect HIMS, but I also think that HIMS is going to be just fine regardless of this news. I think that this news is not unexpected. It's been telegraphed for like the past 7 to 8 years with all of these random acquisitions that Amazon has tried to make in the healthcare space, whether they've succeeded or failed over the past. And it's been discussed in Amazon earnings calls for like 7 or 8 years in shareholder letters. And specifics of this exact piece of news have also been released 5 months ago. Like, this is the biggest known risk out there when you're investing in HIMS. It's like the complete opposite of a black swan. And so I think for this gut reaction happening today, for the stock to be down 14%, is absolutely overblown and quite ridiculous in my personal opinion. So what I did was I bought more underlying stock. I added to my 2027 call position. I sold cash secured puts on HIMS at $23. Basically, the reason why is because I am incredibly bullish on this company after this latest report, and they're playing in a massive market. That's the thing you have to understand with this company. It's a small company playing in a big market. They're competing with big pharma, right? With Eli Lilly, with Novo Nordisk on weight loss solutions. They're competing with Amazon on telehealth solutions. And of course, they're going to have lots of competition in between because there's more than enough money to go around. And that's the thing that Amazon sees when they decide to go into this market. And that's the thing that I think is ultimately super bullish for HIMS, is that if this was not a profitable space, nobody would be here, let alone the likes of a $2 trillion behemoth. And I think if you just take a moment, look at the numbers and the commentary in the Q3 shareholder letter, you're going to realize that there's so much growth ahead for this company. And we're so early on in the story. And ultimately, that's why I'm continuing to add to my position, even though I'm averaging up. And even though you have news like this, where, big scary Amazon is coming to the space, because I honestly believe we're still early on and HIMS is going to be very successful. And they've basically proven up until this point that they can be successful, and management is executing on a high level. So just the 20-second TLDR, if you didn't, listen to this 20-minute video, will Amazon entering this space affect HIMS? Absolutely. Any competitor entering the space will affect an incumbent. Will it completely disrupt HIMS to the point of, the growth being done, or you selling out of the company? I don't think so, because you have this company that's massively growing and they have a moat, they have a competitive advantage, and they have something that these other competitors don't. And that's evident in their growth rates. Anyways, I hope you enjoyed this video and this semi rant. I hope it provided some clarity on the news. Let me know your thoughts in the comments below. And thank you so much for watching. And I will see you in the next video.